Hi guys, it's April 15th. We are back with our Liming Insights podcast, and today we have another insightful session on international asset protection. So to kick off, Jonathan, could you share your thoughts on the global financial system becoming more transparent?
Hey, Ariana. So transparency of the financial system is beginning to impact what we do, which is international tax structures, but it's beginning to impact families in particular. Is beginning to impact families. Many families, say for instance, have trusts. They have an underlying company, they have an investment account at a private bank. So essentially people have accumulated assets in the banking system. The banking system today and for the recent history and today, the banks are privately owned institutions governed by laws for sure. But the banking system, for the first time, because of technology and law, is becoming more transparent. The things that are driving transparency we're seeing are the global automatic exchange of information between tax authorities. Tax authorities globally, 130 countries, are collecting information and transmitting it to each other about the citizens of other countries that are banking and have structures in their countries. And that's called the CRS, or the Common Reporting System. And this system is only increasing. Authorities are getting organized, they're becoming better, getting better at reporting all this information. Then you've got, say for instance, the EU is about to set up a central money laundering authority and a beneficial owner registry where they will be connected to the banks in Europe, and the central authority will have the ability to go in and freeze assets and funds in banks. To say nothing of then, of course, the US up until now had FATCA, where the United States was collecting information and data from banks and financial institutions all over the world. And now the US has just this year introduced the Corporate Transparency Act, where finally they're moving to collect information from banks and financial institutions in the United States, and they're going to make that information available to authorities in other countries. And before, we've talked a little bit also with regards to the US with the John Doe cases, where foreign governments can use basic information that they may have gotten via the Corporate Transparency Act or whatever, and then they can get more banking information from banks, in the US. They can get an order from the US courts to get more and more banking information. So what this means is that the United States, the banking secrecy, as it were, has pretty much come to an end. That is going to play out over the next 2 to 3 years. Many thousands of people who have moved to the US for banking secrecy to be able to prevent information on their wealth from getting to governments at home are going to have to rethink their affairs and arrangements. So that's what we're kind of seeing with regard to the financial system becoming more transparent. It's being driven by these laws, which are multilateral laws. There are 130 countries are in the Common Reporting System. And then, of course, as data analytics and artificial intelligence increases, governments and tax authorities will use this information to find and to freeze assets and to basically control people and their assets and their wealth, which is, at the outset, 5 years out, this is concerning. It's already concerning at concerning levels, and the capabilities of governments and authorities is going to increase a lot over the next 3 to 5 years and beyond. So this is how the financial system is becoming a lot more transparent.
So Jonathan, I just wanted to circle back to a point you made about the banking secrecy essentially coming to an end. How does that impact the current international asset protection solutions that people would use today?
Well, many people from Latin America have simply set up trusts, companies, and investment accounts and moved money and stored money in United States banks because the United States did not simply send information or provide access to banking information to any other country. It's as simple as that. With the Corporate Transparency Act and the Beneficial Owner Registry and the access that other governments will have to the information that the United States is going to collect, that comes basically to an end. So for a lot of people, very simply, the ability for people to just set up bank accounts and companies in the US and then think that their information isn't going anywhere is over. That is not going to be possible anymore. It already is not possible anymore. So that is going to play out over, probably become really more widely understood over the next year or two. The other example of the US changing policy is the CARF, or the Common Asset Reporting Framework, which is just like the Common Reporting System. The United States is not a part of the CRS because they have FATCA, but the United States has joined the CARF, which is to do with crypto. So again, governments and tax authorities will be collecting information from crypto exchanges and crypto businesses that are based in their jurisdiction. That information will be collected and it will basically be exchanged with all foreign governments that are a part of the CARF system. And so far there are about 54 countries in that, and it is highly likely that that will increase because it's an OECD-led initiative. So the crypto system is set for same thing, information exchange between governments and tax authorities. It's interesting to note that even before or in parallel to CRS, FATCA, CARF, and these types of things, I don't think a lot of people realize that governments and money laundering authorities and already banks exchange information to do on, which is used for money laundering investigations. So the authorities often get a lot of information to do with money laundering compliance. And that information is exchanged between banks in one country and and investigating authorities in other countries. As this data is accumulated and analyzed, it's going to it's just going to reinforce everything else that is going on. So the financial system is becoming really transparent over time. Yeah.
Thank you for that, Jonathan. Next, I'd like to find out, can you share your thoughts on asset protection and blockchain crypto?
Yeah, well, the financial system is becoming more digital. Now, this is going to take about probably more 5 to 10 years, but it's already well underway. So you've got crypto, but crypto isn't exactly in the regulated financial system. Large banks like HSBC have just begun to do tokenized digital securities. Securities will be tokenized, not only public securities like public shares, but private shares of private companies will be tokenized as digital shares and tradable on digital platforms, right? So there's that. And then countries are formulating and getting ready to introduce CBDCs, which is they're digitizing their currencies. What's notable about those is that governments will directly have systems that plug into and support and provide a platform for digital currency. This is very different because banks, traditionally, while they were regulated by the government, they're owned and controlled privately. Banks will be part of the system that involves digital currency, but the CBDCs is basically a banking system that basically emanates from the government, and the governments have control of it. So central banks will be basically probably putting banks onto the platform that they use to issue and determine policy on currency. And so this is going to be a massive change. So all around, when you take digital shares, digital security tokens, when you take crypto, when you take CBDCs into account, wealth, a vast amount of wealth is being transformed into digital form, and it will move and be transferred digitally. So the financial system is not only becoming transparent, it's becoming very digital. And technology is changing very, very fast. So because of this is, of course, going to have a big impact on asset protection as we define it today, and the structures that we use to protect assets.
Yes.
Because you have trusts, companies, and really the trust is supposed to bring the asset protection feature. But the trust owns the company has an investment account at a bank. Today, many shares of companies are not in digital form yet. They are held or recorded on clearing houses and custodian platforms. So everything is the record keeping for shares is in these custodians. These custodians all use a clearing house to facilitate transactions of exchanging and record keeping, and it's done using, of course, IT digital systems. But now what we're looking at is all of that is basically collapsing, and you've got each digital share or token can actually be held by an individual. And record keeping is still probably for regulatory purposes still going to need to be done by a custodian that is regulated. But people will be able to have digital shares, digital currency, and crypto on digital wallets, which can all be held on hard drives or hot wallets, which are basically wallets which are made out of software, or it could be like a physical hard drive. So the system is becoming much more dynamic, very dynamic, and the governments are right in the middle. And from a CBDC point of view, the system comes from them. They completely control the system. The asset protection problems in the future with holding cash, once physical cash is gone, is that the government can immediately implement tax policy, economic policy, on fiscal policy, monetary policy, on the digital system is instantaneous. They can impact the value of your currency in a second. They can change it while you're doing in the middle of a transaction. They can tax you, and then the main problem is now where the legal system comes in, is that the government can even freeze your assets, and this is a big concern. A number of situations, you've got the case in Britain right now where a worldwide freezing injunction was applied against a guy who was basically paying for the private jet trips of the British Prime Minister. They froze that guy's assets in a worldwide freezing injunction. This is because some litigation that he's involved in. But the point is that he's only able to get, I think, £5,000 pounds a month to live on. And from a wealthy person's perspective, like that might be ruinous because your lifestyle may well demand more than that. You have creditors, people to pay. So while this goes on, your reputation, your business affairs, your lifestyle, your children, your family, all can be impacted by the judgment of the court basically freezing all of your assets before you've got to had a trial to determine whether you're innocent or guilty. And at the end of the day, if you are able to defend yourself and it turns out that the allegations are not true, your reputation, your business, your lifestyle, your record has forever been destroyed and impacted. And that's the system that we're dealing with at the moment. And so from an asset protection point of view, people will be asking, well, how can I prevent this from happening? One way today that you can do that is by having physical cash. Because if you've got physical cash in your wallet, if you've got physical cash in your house, in your warehouses, at least then you've got a situation where while you're going through this working through this freezing injunction, you can survive. You could keep paying off the people that you owe, paying creditors. You can give people cash and then ask them to wire money for you. You can keep your life going. You can protect your family, your children. I mean, let's say you're a wealthy guy and you have like bodyguards and all that kind of stuff that you have to pay for your children. Are your children supposed to go without bodyguards? And, just because you've got a worldwide freezing injunction against you, does that mean that your family should be subject to security risks and basically like endangered while you go through litigation? No, it does not. Right? So another example is in Canada. The Canadian government, when there was a controversy around the truckers' march and people transferring funds to the truckers to keep the demonstrations going, the Canadian government froze the bank accounts of a number of people involved, which, is being talked about. People are concerned. I don't know whether it's right or wrong, but what I do know is people who are interested in freedom and asset protection and the freedom of choice and protecting their property are deeply concerned that the government, on the basis of a demonstration and a political issue, could basically reach into their bank accounts and freeze them. And it may not have happened to them, but it happened to other people. Some people won't sit around and wait to see if it's going to happen to them. So that's one situation that's going on, that's being discussed, and people are discussing asset protection in that context. Another example I give is the Kanye West example, where it was alleged that he made some comments which were allegedly anti-Semitic. And because of that, a company he was doing business with, the Adidas shoe company, was able to get an ex parte injunction. In the United States, it's called a temporary restraining order. But what it is it's an injunction. And what it did was they froze all the money in his company's bank accounts. And it seems that a lot of his personal money and affairs, and that's his family's life and everything, was connected to the funds in the in the bank, which was, I believe, JP Morgan, if I'm not mistaken. And all of his company's funds were frozen. Now, I don't know if that's right or wrong, in the sense that, I don't know regarding what's being said about the allegations that were made against him. But what I can say is this, and he made the observation afterwards also, that if it could happen to him, it can happen to anyone. Somebody got a worldwide freezing injunction against all his assets. So when his company's cash is frozen, that means he can't pay suppliers. He might have been in the middle of deals. He can't, buy things. If he's traveling, he can't pay for travel. It would impact his ability to operate things for his family and his business. And, he could have been catapulted into bankruptcy. I think he was. So as the financial system becomes more digital, as governments get more information, they are able to, the risk to your freedom, the risk to your ability to protect your assets greatly increases. Now, the average person who doesn't have millions of dollars, is employed or is, working in a job or has a small company, may not necessarily be as concerned as someone who has like $100 million, 5 different companies, a wealthy family, lives in a country where you need to accumulate your wealth and banking in a country like the United States, because you can't afford to let the government at home and organized crime at home know that you are this wealthy. You might be keeping a very low profile. I don't know. This might be concerning for some people. We know this because we have spoken to people that are concerned about this. Add to this the speed of social media and the fact that people can make allegations, that allegations can mushroom quite quickly. We'll do a separate podcast on this, on crisis and reputation management. But, if allegations are made against you, banks and compliance departments of banks can pick up, they're constantly running algorithms, and they will increasingly be running algorithms. Google, of course, supplies anti-money laundering information to banks and financial services companies. And so compliance departments of financial institutions, your trustees, your banks, your regulated financial services providers, all of them are using the digital platforms to get information. If your name turns out associated with allegations, they can freeze, they can report you. And keep in mind, these are allegations. You can get reported and your assets can be frozen while an investigation is carried out. But for a lot of business people, if your money is frozen for 30 days while investigations are carried out, that could destroy your business. Because, you could be in the middle of contracts, you could be about to settle terms or payment with you could be in the middle of deals. And in a lot of cases, your credibility could be completely blown, because if people know that your assets are frozen and that you're subject to investigation, a lot of times people make decisions on whether to deal with you based on, they'll say, if you're subject to investigation, we won't even want to deal with you. So there's a lot of risk. And as the system becomes more digital and faster, the risk and the ability to protect yourself becomes even more important. So that's my perspective on that.
Jonathan, you mentioned that the financial system is becoming more digital. Could you just elaborate on what you mean by that and how it's becoming more digital?
Well, okay, so we've talked about CBDCs and the government making currency part of it based on a digital system. With crypto is growing. It's growing because there's a lot of people that desire freedom for their assets, freedom from control. That's why it's growing. But the problem with crypto has been the off-chain transactions and record keeping is one of the biggest problems, because off-chain record keeping needs to be regulated, controlled, and done to certain standards, and even really done to have some oversight to the authorities, because at the end of the day, while on-chain, blockchain transactions are immutable, which means they can't be changed, which is why blockchain is such a good thing. At the end of the day, the crypto is going to be regulated. This is the direction it seems to be going in. You see in the US, in the UK, Canada so far, they have regulated crypto exchanges. So crypto is growing. We've talked about digital securities. Both private and public shares are going to be digitalized and tradable on digital platforms, held on digital wallets. So you don't have to leave your digital shares with your broker or the transfer agent or someone else. You can have now those tokens on your wallet that you have with you physically or on your computer. We've talked about CBDCs, which is the government. So you've got CBDCs, you've got digital shares and tokens, you've got the on-chain, off-chain, blockchain reality. Then you've got the AI and the data analytics and the systems that are analyzing all of these things and the data from these things and triggering legal actions. So the system is very quickly becoming more digital. I think within about 5 years, we will begin to, it will be clear that the system is a lot more dynamic or much faster today than it is today. And the risk and the system, the risk is going to be a lot higher, and asset protection is going to be a lot different to do. So the system is becoming much more digital. I mean, governments and tax authorities and authorities will be exchanging a lot more information in 5 years even than they are now. And they'll also be analyzing that information using artificial intelligence and algorithms and machine learning and all these different things. So once all this gets moving, in 5 years, I mean, the implications for asset protection are massive. It's going to have to change.
So, Jonathan, could you also share your thoughts on how the digitization of the financial system will impact the options that clients have as it relates to international asset protection?
So, my thoughts on the implications for international asset protection are everything is becoming more digital. Currency, digital assets. I think regulated institutions, because the system is going to be compliant, will have limited ability to protect assets in the way that people are thinking, because people won't want to be unfairly targeted or unfairly have the law applied to them. And the reality is that governments will have the ability to control your digital assets through the financial system. And governments, of course, will get it wrong. It's just a fact of life. Governments are not the best run institutions and systems in the world, but they are certainly becoming a lot more powerful. So they will exercise control. People will be impacted by that. And so people are going to want to be able to protect assets. So having assets, say for instance, so cash will be gone. If cash is gone, then people will be able to have digital assets on like cold hard drives, which you put in your safe at home, but of course storing lots of digital assets at home in a wallet is a problem. Where you and your family live is probably the security people can say that's not a great idea. So you're going to want to keep those at a bank in a safety deposit off the net is probably going to be one option. I don't believe that safety deposit boxes are going to be regulated to the point where you have to explain what is in them. So the physical security of banks, funny enough, is going to come back to the fore, because rather than keeping it at home, you will want to keep it in a bank, keep your assets in a safety deposit in a bank. That has other security implications, but I can't figure out all that myself. The most interesting thing I see there are two things I've seen for asset protection for the future, which is, in addition to the simplicity of having assets in a cold wallet and having it off of the internet so that somebody can't just instantaneously freeze your assets. There's three things out. One is the ability for people to do transactions directly. So say, for instance, and you already see this in apps where people can use real-time transfers between themselves. You've got cards that can transfer money directly using machines, but two individuals can transfer now money from one to each other using phones. So that is probably going to increase. The peer-to-peer, business-to-business, consumer-to-consumer, there will be more ability for people to use technology apps to transfer value between themselves directly and avoid regulated platforms. You can't do it with the digital CBDCs, but you probably might be able to do it still with crypto and digital shares. The other asset protection in a digital world that I am looking at it's a book by called Software by Major Jason Lowry, where he's basically saying is that in the future the war is going to be fought via software, digital systems. And he says basically that the best system for protecting digital wealth and assets and information is the proof of work system, which is basically where you have to do proof of work to be able to get past the system. The proof of work means processing a lot of mathematical problems on a lot of machines and expending a lot of energy doing that. And the only way to get past that requirement is to do the processing, which requires a lot of electricity in the real world. And so hackers and the government and people that would attack you or want to get into your systems and freeze and control everything and take it over would have to basically overcome that proof of work requirement. And if you can't do that in the real world, then you won't be able to access what's on the other side of that proof of work system. And what they're also saying that this is going to be the thing for countries that are attacking each other. Why send missiles and people over to your enemy when you can disrupt their economy, cause damage, make them poorer? When you make the country poorer, the people will probably rise up and go into revolution, and the country will crash itself. And all you had to do was basically hack their systems and introduce a level of chaos. So why take 100,000 or a few 100,000 as your own citizens and march them 5,000 miles and pay to feed them and look after them and secure them and all the weapons that you would need to use to fight people along the way and so on and so forth? Why not keep all those armies at home and all those resources at home and hack the systems of the other country and cause chaos in that country and weaken them and cause that country to basically collapse and fold in and upon itself? That is probably how war will be fought in the future. So if as a country you can't you can't secure your banking system, your airline system, your water system, your electricity system, your other systems that you need for national cohesion, if you can't as a country protect them, then you won't be a country, because they will be able to be hacked and the country will be able to be destabilized and destroyed, because no country can survive where no population is going to put up with all of their financial assets being hacked and destroyed and lost. because people spend their lives working for money, for wealth, which is crucial to the safety of their children. People in society need to be able to pay for things and do things and operate on some semblance of merit. If I'm wealthier than you, I want to be able to pay for my first class ticket. If I am wealthy and I'm somehow, because of the system being hacked, I'm reduced to the same situation or priority as someone who has done no work and is on basic assistance from the government, there's going to be chaos. So countries and nation states will have to protect themselves. And he's saying that proof of work, and so the individual as well. So if I'm a wealthy individual and I want to protect myself not only from my government, from hackers who are criminals, but protect myself from my government. Of course, what you're going to have to do is find a way to comply with the laws of the country, while at the same time protecting yourself from your own government. Because it's saying while you want to comply with the laws of the country, you still don't want to surrender complete control of your digital wealth and existence to the government. So, and you won't want the government to be able to do that, without going through the court system. So what he's saying is you will have this proof of work capability, which will give you the ability to protect yourself in that way. Or at least it might not be all your money, but at least, if you're worth 100 million, if at least 30 million of it is behind a proof of work shield, which a government can't hack, then you and your family can exist while the government freezes the other 70% of your assets and puts you through the courts, and you go through the process that, when you live in a society, we're all subject to the laws and the rules of society. So, it's not an example, but I'm watching a series called Mr. Robot with Rami Malek, starring Rami Malek and Christian Slater, which is excellent. These hackers, F Society, hacked the largest corporation in the world called E-Corp. It's a massive global corporation. But these guys hacked it, and they basically destroyed all their records all over the world. And they partnered with a Chinese hacker group called the Dark Army. And together, these guys hacked the entire records of the E-Corp system, which basically then destroyed the banking system of the United States. But that was really just the first step. The second step was for the Dark Army then in the second step wanted to, what was it that they wanted to do? I forget now. The second step was, they wanted to issue their own crypto to everyone and replace the national currency, which is the US dollars, which is collapsed. But if you go back to the book called Software by Major Jason Lurie, what he was saying in his book is, having a corporation in charge of your currency, blockchain, crypto, whatever is fine, but can you trust them? To what extent can you trust a private corporation? Can citizens trust a private corporation to do right, to always be fair, have fairness, have righteousness at the core of their existence? And the reality is no. Private corporations are motivated by profit and what is allowed in the law. So if corporations, corporate groups, private interests create platforms where economic value exists and is exchanged, how do you, the citizen, know that that entity is not creating a backdoor, allowing information, an unfair amount of information to flow? How do you know that blockchain hasn't been made a massive offer by, say, for instance, a government of another country to let them scupper all the economic value in that blockchain, you know, but they'll pay out the founders and the original people? Like, how do you know these things wouldn't happen? So, for sure, blockchain companies and crypto companies and companies in this space, because always in the financial system, reputation has always been important. Banks have always guarded their reputations jealously and carefully and put a lot into it, their brands. But it's really trust. Goldman Sachs, Bank of America, you know, any bank, Lloyd's Bank in London, you name it. They all project their brands, they project trust. They, even while being involved in the financial system and, you know, subject to, you know, scams and problems and different things. But I think people understand that that's just a part of life. So that's those are the three kind of things I see for asset protection, which is, you know, I like this idea of the proof of work. And it may be some other system that requires, is not, because the other thing that Jason Laurie was saying in his book Software is that software is man-made. So no matter how complex you make it, and if you make it very complex, there's a possibility that some people won't understand it. And then that creates, if you don't understand a thing, that means that there could be things in there that could be exploited by hackers. And then if it's complex, it can't be understood, then that means that there could be vulnerabilities. So software can't secure software. And this is why the proof of work, which is literally, if you go on the internet, you see what proof of work requires. It's literally warehouses full of machines that are processing these things. But that has to be done before you can get access to the other side. For the transaction to take place, all that processing has to be done. That means all that electrical energy has to be spent. And so with proof of work in place, hackers won't want to spend all of that money hacking, you know, paying for the electricity to hack the system. Countries won't want to, in war, won't want to buy all the oil and generate all the electricity that's required to hack your another country's proof of work system. So if there are other proof of work mechanisms that can provide asset protection, I'm sure they will come online. I think in the future there's going to be there's going to be increasing demand for proof of work and asset protection. And so those are the main things that I see for asset protection, in addition to all the other things like cybersecurity and all these things. I think finally when it comes to structures and protection of information within the banking system, like I've come across people who are changing the name of their trust every day. So if you can proliferate the change of the name of your trust every day, then that makes it much more difficult for fraudsters, even the government, the people, to attack because the name has changed. So you could go on from there to change, if the trust is digital, if the system is digital, because right now systems don't enable that. But if there's digital identity and the trust and everything is on a digital platform and the company and everything, the shares, everything, then you could, theoretically, you could change your trust, your company, and all your AML, KYC constantly. You could change it constantly. It would not be a hassle to change it. You could change it every day. And so if you can change it every day, that means that it would be very difficult for any authority or anyone to zero in on your structure and immediately freeze it without concerted effort. So these are 3 examples, I think, of change that's going to be brought about by the financial system becoming more digital and more transparent. And asset protection, I think, is going to have to change massively, very quickly, in the coming days and weeks.
Thank you, Jonathan. Can you now share some examples of the implications of the global financial system becoming more transparent?
Well, yeah, I will use this as a summary. So, transparency is going to make governments more active, give governments more control. This is going to drive asset protection, the need for asset protection on the consumer and business side. Wealthy people don't want their assets under control, their privately held assets under control by the government. Governments will exercise more immediate, faster control. The other thing is, with all this stuff going digital, it's the speed at which things can occur. Previously, filing an injunction took a while, but if you can file an injunction without notice on a system, theoretically, you can do it within hours, within minutes, and almost instantaneously, giving the person no knowledge that it's happening, no ability to react. And as we've discussed, when there are allegations at the beginning of any process, the person is innocent until proven guilty. And so you could suffer, because the economy is going to be moving so fast, and because there's so much data being crunched, when you get frozen and investigated, other people will know, your name will show up on databases. That will impact your compliance. Banks will close your accounts, freeze your assets, may overreact. And all of these things can basically destroy your business through no fault of your own. So it is going to be important to protect your assets and even to some extent protect your business, because then you have to think about, maybe you should have 2 or 3 brands are doing the same thing, but your business needs to be divided across 3 different companies and 3 different brands. Because if one brand gets frozen and shut down, if Yeezy had Yeezy, Squeezy, and Multipleasy, the other 2 could have kept going while the one was shut down. That's if there was some type of asset protection structure so that the owner was only directly connected to one and not the other 2. So this is a real going to be, all the speeding up of everything. And, there are other technology things like quantum computers are on the horizon. The speed at which all this stuff is processed is going to increase massively. Starlink, the satellite networks, which means governments and the flow of information digitally is going to be at light speed. These guys are putting thousands of satellites in orbit. So all of this is going to become more real to the average person in about between 5 and 10 years. I think wealthier people will see it and react to it a lot sooner. As you know, we have clients who basically have financial technology, where they're enabling instantaneous cross-border transfers at very little cost. In 2 or 3 years from now, those costs are going to be lower. Systems are going to be faster, more instantaneous. But banks and authorities and governments are also getting these systems and capabilities. So, yeah, I think asset protection is going to change. Transparency is driving all this. The transparency, the technology, the law, all of this is going to be moving really, really fast. And because speed in this case can be ruinous when it comes to law, and because until you slow down and have a trial and look at the facts and are subject to a jury of your peers or to a judge who has all the facts and the arguments and everything before them, and how can consequences be incurred without justice? Justice takes time. The application of control is increasing based in line with the technology. Justice is not. The ability to have judges, judicial systems, and decisions at the speed of digital is not, is not matching the developments on the other side. So asset protection is definitely going to be a victim of that. And as I said, because then you add in social media, and social media is global/international, and it's social media and allegations and all these things are going to be picked up automatically dynamically by digital compliance databases and firms and regulated businesses. And so you can be shut out of the digital system very quickly. So the idea, if you think about it from an asset protection point of view and a business and operational point of view, the system you can be taken down unfairly in a matter of instantaneously. Then you're going to have to think about having multiple identities or multiple ways of operating and doing business and existing. And for your family as well, you need multiple ways of doing that on the financial system. Now, the cost of that is going to go down, and the possibilities of that will go down. But obviously, this is, all this is going to have to be worked out in society. Governments are already doing things like banning the flow of information that they don't like using, where we see the TikTok ban in the US. And so this is kind of all this stuff is playing out before our eyes. And, it will not, happen overnight, but it is happening day by day. And, but, I think in 3 to 5 years, it will be very noticeable. But I already expect people, our types of clients to react immediately. I just want to mention when it comes to the Black community, as we've talked about in other podcasts and videos, the Black community has an additional concern in that we believe that and it's being discussed again, some data constructs, digital platforms may have bias in them. Because at the end of the day, there's racism and prejudice in society. Makes sense to believe that therefore it will exist in things like artificial intelligence, data sets, platforms, and so on and so forth. On social media platforms, many Black people complain that they get shadow banned, they lose communities seemingly at random. I've heard podcasts with people, I don't know whether these allegations are true, but I've heard podcasts where some celebrities can pay money to individuals that have connections to people working in certain social media platforms, and then they can have that person's social media platform shut down. And that's very unfair. And this is where I was talking about trust and backdoors. And I don't see social media platforms going to great lengths to prove to people that they can be trusted, certainly when it comes to one citizen against the other. So the relationship of social media companies and governments, I think, there's a reality and a security sphere to that I'm not going to comment on because that's way above my pay grade. But I think it's legitimate to, because security is real and governments have to do what they do. I'm not in that space. I can't address that. But what I do know is that, the 5 big digital companies in the United States don't have access to the Chinese market. China has closed off its country and it has its own social media platforms and digital platforms and what have you. And, there's reasons why they did that. So the TikTok discussion is very interesting. But Black people, coming back to Black people, if you spend days, months, years building a following on social media, and then a social media company arbitrarily shuts, just removes you without any, they're essentially, in a way, they're really taking your property, because you and your community generated a whole bunch of user data, which is very valuable. A following in and of itself is dynamically very valuable from a cash flow point of view. And to have that taken away arbitrarily without a court process is concerning. I don't think anyone has dared to take a large social media platform to court yet, because of course there's daunting. If you're just one person going up against a large billion-dollar corporation is daunting. So therefore, I would say to Black people is that, then your view of asset protection is even more important, where yes, you will use these mainstream large digital corporations, but you also need to set up your own, so that if you're unfortunate enough to be banned, your following is arbitrarily taken away, and you, practically speaking, can't do anything about it. No point, shouting at the walls. You still have to live and survive and make progress and move on. So you need to basically implement technology, that enables you to move forward. I know, say for instance, quite simply, that some business people that I know, they use social media platforms very sparingly, and they email out their newsletters. Mm-hmm. They go direct to the inboxes of their customers. I've seen another known operator in the media space. He has a messaging platform using telephone companies. Telephone companies are regulated, and so can't limit or restrict your access or even grant access to the government, unlike social media companies, which are not regulated. And so you can use they use the messaging system, telephone number messaging, direct messaging. They deploy digital on that, which is again a way of not being subject or dependent on the social media platforms. So I'm all for that. I'm all for more, especially for all of us who are small operators. I think, that's what I would say to the Black community and to small operators and those who are concerned, guard your businesses by using these direct approaches, while at the same time doing social media, so that if you get banned, your community is confiscated, eliminated arbitrarily, you can't do anything about it. You can still survive and move on. So these are all the things that I'm thinking about and we're discussing with our clients.
So Jonathan, do you think that current asset protection solutions will still be relevant, given that the global financial system is becoming more transparent and digitized?
This is a really good question. Trusts are built on the law of equity. An injunction is the creature of the law of equity. The law of equity fundamentally in and of itself is built upon a philosophical foundation of righteousness, fairness, justice. It is there to supplement the legal system when justice is required. Because, man-made laws often don't cover everything in the spectrum, and so equity often comes in and is used to fill those gaps. So as this asset protection, as it were, is often delivered by the use of trusts, which means you put whatever's in trust is beyond the owner doesn't legally own. But the anti-money laundering system, the flow of information, the social media, allegations, CBDC, all of these things do an end run combined with the automatic exchange of information between authorities. All that stuff doesn't end run around really what a trust is meant to achieve when it comes to asset protection. Because if you, the beneficiary, are associated with a trust, as in you set it up, you are a beneficiary of it, and money laundering and CRS and these things have complex provisions that do require really, they look through and they want to know and record who ultimately really is the beneficial owner of this structure. Then, because these things are the information that these things can then collect, they know that you are a beneficiary of the trust. They can still trigger a run around the legal system, and you can then immediately be subject to instantaneous restrictions. CBDCs, because the government controls and they don't have to wait for the courts. They can say, right, do it in parallel. Go to the courts, but freeze their assets. Change the taxes and collect these taxes immediately, or make this currency worth less now, and then, and then we'll get the economic policy out in the morning. The social media can report allegations that they see somewhere around the world, and that can go global almost instantaneously and be picked up by the algorithms of compliance service providers immediately. So in all these ways, if your trustees pick up that there's a freezing injunction against you, just like we saw with that story with that guy in the Financial Times, that's a newspaper report. All the compliance databases will pick up that this guy is subject to a worldwide freezing action. And increasingly, if he has trusts elsewhere outside of London where the freezing injunction originated, all of his trusts, all the regulated financial services companies that he has funds in will basically be freeze his trust. The trustee will take no action, and without telling him also. And what a lot of people don't realize is that, because obviously the majority of people haven't been through this experience, what people don't realize is that the big regulated trustee companies don't have time to get to know you, and they're not going to second guess allegations in the legal system. They're not going to endanger the majority of their clients and their business and their revenues and their cash flow. They will just freeze your assets. Just freeze them, not take calls, not talk to you. You won't be able to, then it will be too late for you to hire lawyers they won't hire lawyers and call you and say, hey, we got an issue to deal with. No, there'll be none of that. They'll just freeze it and you're out. So really, how much protection large companies, professional regulated trustee companies, do protect you from criminals, fraudsters, the deceivers, hackers, all these. Yes, so they're important for that. But when it comes to these other instantaneous risks, just because of the transparent financial system, they won't protect you. They definitely won't protect you from the control of government, from the unfair application of power by a government. And people are going to have to look for a way around that. So, and that's going to evolve, because if there's no more, right now you can just have cash. Yes, it's difficult to have cash in a safety deposit box, but you can have it in someone else's name, or as long as you have the key, you're good to go. But accessing it could be, you'd have to go and get that person and probably go and get it. So there's ways around that. But let's assume there's no more cash. how will you secure? It might be possible to get, to purchase Bitcoin or other valuable digital assets, prove that they're there in a wallet, and not have them associated with your name as an individual, so that you can exchange them physically to be able to continue your existence while you work through the legal system. But yes, so you will have to think about asset protection very carefully, because of course with digital there's possibility for everything to be connected. So a trust alone is not really going to provide asset protection against digital wealth. Not alone. You will have to use other mechanisms or ways of protecting. One good thing about digital is that you will be able to, hold wealth outside of banks and regulated financial entities. But again, the risk of having assets yourself is highly problematic.
Okay. Well, Jonathan, thank you very much for sharing your thoughts and opinions on international asset protection, and more so how the global financial system is going to be impacted by digitization and increased transparency.
Okay, thanks.
Thank you.
Cheers.